What do we need to know about rising directors and officers insurance rates, and how can you make sure that you're keeping the right coverage at the most competitive price? We're going to talk about it today. Here we go. Hi, Ryan Hanley here, founder and president of Rogue Risk, where we do insurance differently, specifically by giving you knowledge and information to make the right insurance decision. If you find this content valuable and you're watching on YouTube, please tap that like button for us. That just helps other business owners, business leaders like yourself find this content if you think it's valuable. Okay, great. So here we go. Directors and officers insurance. Well, the good news is while rates are still going up, and that is due to mostly the macro economy and the general just rising of rates across the board, the continuing increase in judgments and payouts from lawsuits, the good news is rates have slowed. So while in the third quarter and fourth quarter of 2022, respectively, we saw 10 and 6% increases overall in directors and officers insurance, in the first quarter of 2022, we've only seen a 3% increase overall in directors and officers insurance. This is a very good sign. There are a couple of reasons for this. The primary reason is a lot more companies are starting to dip their toes into the D&O space, which means there's more capacity, there's more options. And when there's more options, more capacity in the market, rates come down. That's a good thing. What you need to be careful with there is that new entrants to a market don't always have the best coverage. So if you're switching from a tried and true directors and officers insurance carrier to someone who maybe is new to the space, it is important that you're working with a broker who can kind of weed through the policy language and make sure you are still getting the proper coverage for your business. Remember, the reason directors and officers insurance is so important is because executives and board members are putting their personal assets at risk by taking those leadership positions. And directors and officers insurance protects your executives and board members' personal assets in the event that they are named in a claim regarding the business. So for all those reasons, directors and officers are very important. It's a very good sign that in general, the market is seemingly stabilizing after a few years of very high rate increases. It seems like those rates are starting to steady. It's nice to see that there's additional capacity in the market, more options, more availability to directors and officers insurance, especially downstream, small private company directors and officers insurance was a fairly inexpensive product. We're looking at anywhere from $900 to $1,500 a year to get $1 million in directors and officers insurance for a low risk, private kind of small business. So that's a good thing. That all being said, there are a few things that we need to consider. Cybersecurity and cyber-related risks are a major, major concern for directors and officers. If there's a cyber-related claim, uncovered cyber-related claims, and or inadequately covered cyber claims can come back to your directors and officers insurance. The other big one is ESG, or environmental, social, and governance related issues. This is a big push in our current ecosystem, the legitimacy of which is in question in terms of should you take what's being pushed out through ESG papers and white papers and actually use it in good business practice, or is it something to just use as a filter of sorts as you're making decisions, something to keep in your mind, right? Obviously, the environment, our social economy, and how we govern and relate to each other is very important, but we've seen over time that ESG related businesses, particularly if you're running your business off an ESG percentage score, tend to perform very badly in the long term in terms of profitability. So just be careful, but understand that depending on what state you're in, what municipality you're in, and what goes on in the US in general, there could be regulations, there could be downstream pressure pushed down from politicians related to ESG onto your business. And if you don't have the right coverages in place, if you're not taking the right precautions as are mandated to your business, you could be in trouble. So it is, and I foresee, and I'm not the only one, that ESG related governance, ESG related issues, ESG related regulations are going to provide pressure on pricing and push rates back up. Unfortunately, our politicians do not care about the pressures that are put on small business from a financial and margin related standpoint, and therefore they shove down regulations like ESG onto small businesses. And when those issues create claims that then can be adjudicated against, and there are lawsuits, rates go up. So all that being said, it is important to understand that while it is very good that directors and officers insurance rates have steadied, and if you feel like you're paying too much or you've seen larger increases year over year and you don't have a high exposure, it may be time to look for another carrier, work with a trusted broker to get that done. But ultimately, we want to keep our head up around the issues of cybersecurity and ESG as they could potentially push rates back up. Okay. If this is the kind of relationship you'd like to have with your agent broker, we would love to work with you. The best way to get a hold of us is by phone, 518-960-6600. We work in all 50 states, so wherever you are, we can come to you. You can also email us at gorogue@roughgrisk.com. You can visit us online at roughgrisk.com, or I'm sure there is a button or a link somewhere around this video which will let you contact us. Whichever way you choose, we look forward to working with you.